Hey, Aaron Adams here with Infinity Investing. Topic of the day is inflation and how real estate becomes a hedge against inflation. And I hear investors all the time will say to me, Aaron, I'm worried about the dollar devaluating, or I'm worried about the price of goods continuing to go up. You know, I hear that materials prices have never been higher, labor has gone up, and what I earn and what I have is shrinking in spite of my best efforts to invest and to save. And real estate always has been one of the best hedges against inflation. If you look back at rents going back 25 years and you see the median rent, what you see with rent is a steady climb. Because what's happening is while inflation is driving the value of the dollar down 3, 4, 5% a year, every year when you re-rent a property, typically you have a 1-year lease, you are correcting for inflation by raising the rent. And I was reading a book a few years ago, and they were talking about 400 loaves of bread. And they said if you go back all the way hundreds of years, 1 month's rent has always characteristically been tied to 400 loaves of bread. So I said, okay, well, so a loaf of bread's $2, and average monthly rent in the United States is just under $1,000. I guess that makes sense. There's your number. And that's really been the case. It's this weird statistic. And what it really is highlighting is the fact that food prices climb with inflation, so do rents. Now, let's do a comparison. Let's say you have your $100,000 retirement sitting in a combination of cash and the stock market. God forbid the dollar devaluates for whatever reason, because we just print dollars off in the United States, or the stock market crashes like what happened in 2008. In 2008, when the market crashed, you had many Americans that lost 35, 40, 45% of their retirement account overnight with stock prices just dropping. And they woke up in 2009 with less than half. And it took years and years for them to recover for that. And let's say for the last 12, 13, 14 years, you've done nothing but make money. And so you're like, I'm doing good, but now I'm getting closer to retirement and I'm nervous about that. One of the best ways that you can protect yourself is by investing in real estate. Because while the property value may drop, rents always go up. And that becomes a built-in hedge against inflation. And a lot of investors are unaware that you can actually own property inside your 401k, inside your IRA. And whether you own it in your retirement account or out of your retirement account, the ability to raise the rent to accommodate for inflation becomes one of the most powerful ways to protect your wealth. Let's say you spent $2 million for a house or $700,000 for a house, and the property values go up, the property values go down. All that matters is what's the property value when you have to sell. And there's a lot of reasons why we sell. Yeah, sometimes we plan to sell our house because we are ready to retire and go right off into the sunset as wealthy retirees. But there are other causes in life that compel us to sell property that are out of our control. I call those catastrophic life events. And so, you know, you're one cancer diagnosis away from having to sell property. You're one divorce away from having to sell property. You're one loss of job away from having to sell property. Those catastrophic life events are things that you can't control. And so your primary residence becomes a liability that's exposed just like a retirement account that's sitting in the market. If you flip that and think about, at Infinity, we encourage our investors to have 30% of your net worth in a business, 30% of your net worth in the market, 30% in real estate, 10% in cash. It's our 30-30-30-10 diversification. If you're not diversified that way, then the next crash exposes you, the next personal catastrophe exposes you and your money. And we don't want that to happen. We don't want you to say, I was almost there and then XYZ happened and now I lost it all. We want you to have that 30-30-30-10 diversification, because then inflation can't take away what you've worked so hard for. And you always have that rental income. You know, we have a generation of Americans that have never been this broke. And the average 65-year-old has less than $200,000 in a 401k in a retirement account. At Infinity, not only do we teach you how to protect what you have and avoid the inflation, but we also teach you how to grow your wealth. And so every month we do a full one-day training where we teach these concepts. This is just a couple-minute discussion, but if this is interesting to you, if this is something that you know that you've been meaning to map out, then go to infinityinvesting.com, click on the link for our next Saturday Infinity Investing Workshop, and join us. We pride ourselves on being able to break this down in a way that you can finally understand, then you can quarterback your own money and take charge of your financial future. So I look forward to having you join us at one of our virtual events and hopefully down the road at one of our live events.